So I think folks are joining in. We'll just, I think, wait for a couple of more minutes for a quorum form. I think you would ask this question, around the community, what we're trying to build. So essentially, Utsav, this is a, passion project that both me and Apoorv have started. And, Apoorv obviously works at Google, I work at Meta. And, Apoorv's been a mentor for me for the last 10 years. He's invested in both of my companies, right, helped me crack job interviews, and so we were, and he mentored me to start my angel investing journey as well a few years ago when I started, right?
Mm.
So so we so at Accelerate we're trying to do two things. Essentially, we're trying to build an accelerator for early stage founders, essentially focused on consumer brands, consumer internet companies, and enablers. That's one aspect of it. You can think of it like the Y Combinator for consumer founders in India. We just
Okay.
got done with our first cohort, last month. Essentially, we invest $50,000 in a company, and essentially the early stage consumer brands and internet companies. And then there's the second aspect of Accelerate, which is this Super Angels community, which essentially is, like folks who are joining on the call who want to kind of learn more about angel investing, want to kickstart their journey. If they feel they can co-invest with Accelerate along within our Accelerate startups and other investments that Apoorv and I keep on meeting. But the idea is more from an education perspective. We've hosted about 15 of such sessions till now. Had like legends in the industry, and we've kind of got an opportunity to learn from different founders, different investors, right? So it kind of gives people a great perspective, on how different people are investing and how they're going about their journeys. The community is about 1,000 plus strong.
Nice.
Generally we get about 10 to 15 folks on a call today. I think because of you, thank you so much. We have a great quorum. So I think without further ado, I think we can kickstart. And maybe I can quickly introduce myself, for the folks who are joining for the first time. My name is Karan. I work at Meta. I lead marketing for Instagram and Facebook in India. And I've been a 2x founder. I've been a very active angel investor. I've done about 60 plus investments, majorly in consumer internet, and enablers. And I run Accelerate, as I was mentioning, as a passion project. Today we have Utsav, with us. Utsav was the ex-CEO of AngelList in India. He's invested in some of India's most iconic unicorns and sunicorns. Companies like Bharat, Coin DCX, Sugar Cosmetics, Innovate, Jupiter Money, Mosaic Wellness, Park Plus, Pristine Care, and so many others, right? And it serves also building a community platform called Offline, which I'd like Utsav to talk about. So Utsav, welcome to the session. Maybe if you can give a quick intro about you, that will be great, and then we can kickstart with the questions. We're also recording the session, if that's okay for you.
Sure. Yeah, absolutely. Okay. No, thanks so much. And good to see a good attendance on Sunday. I hope I can make the next hour at least productive, or at least share whatever little I've learned in the ecosystem. So I used to lead AngelList in India for the last 7 years. I started with AngelList in 2016 when I reached out to Naval Ravikant. And why did I want to bring AngelList to India? Then I think the context is more important here, because I observed like clear problems in the ecosystem. Like I think there were no clear incentives for founders, best syndicate investors, and sort of the different people in the ecosystem to come together on a single infrastructure platform, right? So AngelList solves for all of this triangle of angel investing, which is syndicate backers, the people who have access to good deals, and founders, right? Founders want cleaner cap tables because they don't want to deal with like 50 angels on their cap table. So we solved for this by pooling all of them together in a single entity. And then there are people who have access to good deals, right? I mean, they're in the flow of things. They're already existing founders or leading high growth tech companies, and founders come to them for capital and knowledge. So, I mean, we gave them the infrastructure, gave them the incentives, or sort of the infrastructure to monetize their access and judgment. And there are people in the ecosystem who are different cities, based in different cities, don't have access to the best founders. So all of this comes together on a single platform to sort of allow people to invest in some of the most exciting startups. So AngelList solves for this. And I was fascinated in 2016 when I discovered Naval on AngelList. I think it was a podcast with Tim Ferriss that he was doing. And I was just fascinated by the guy. So I reached out to him and I said that I think AngelList can be beneficial to many founders and investors in the country. So 2016, I was hired by him. I did uh, almost a year and a half as a consultant working with SEBI to allow the infrastructure to come to India. And then we launched in 2018. Now I think we're more than 5,000 investors are active on the platform. They come and invest in hundreds of startups every year. And across this while, I started dabbling in investing. My first angel investment was in 2014, and I really stepped up after the infrastructure came because it gave me a platform to monetize my access and judgment in the ecosystem and help me build more stronger relationships. So that's when we really stepped up, and now I'm building Offline, which is a community of top tech founders in the country.
Amazing, amazing. I think one takeaway, at least for me, from your introduction is the power of cold emails and reaching out, right? So I think and that's something that I've also noticed. The biggest founders, like if you kind of reach out with the right intent, they always kind of reply, right? And I think kudos to you to kind of identifying this opportunity, and for Naval to reply, and then building it together in India and building such a large platform which enables angel investing today. Utsav, for you, what was the motivation to start angel investing? Was it purely because it's a great asset class? Was it an intellectual simulation? Was it just learning from best founders? Like, what inspired you to get into it?
I think a couple of things. I mean, I had studied tech and finance, so I was always, interested in the intersection of the two. But I think, I didn't have an idea that I could build on. I think everybody should. They spend their entire lives and their working lives figuring out what they want to do. So मेरे पास ऐसा कोई idea नहीं था कि मैं tech startup या next best SaaS startup बना सकता हूँ. So I think my form of pseudo entrepreneurship came from angel investing, right? In 2014, where the noise around startup ecosystem was not that much. I think Flipkart had just become a unicorn, so I think it was still very nascent, right? The whole angel investing ecosystem and the startup ecosystem in general, right? So it became a form of pseudo entrepreneurship. I loved hanging out with founders. It gave me energy. It gave me new ideas. It gave me the motivation to do well in my personal life as well. So I think all of that came together in angel investing. I think it's the best form of pseudo entrepreneurship, according to me, right? And I think just spending time with founders, I think you become better yourself in terms of learning so much. And having access to all of these smart founders as they grow on their journey, I think it's just fascinating. And I've learned so much from just investing that I would continue doing this. Of course, the financial returns are also there. I think historically, angel investing is at least, I think the last statistic that somebody put out was at least 22% is the average. But I think if you do really well, then I think it can be an asset class which delivers exceptional return. But always go into this knowing that returns take long. And sometimes, everybody wants to do it for glamour. Everybody wants to put on LinkedIn, ki I'm an angel investor. I think that's the wrong intention to do it with. The question that I was asking myself, and I still ask myself, why will the best founders come to me, right? If I'm not doing anything of significance in my other sort of work life, luckily my work itself became angel investing, like AngelList India. But ask yourself, why will a founder come to you, right? Money is now abundant. Every other person is literally, I think, flush with capital because of stock markets or other things. So I think capital has become a commodity, right? This is one of the rare asset classes where the asset chooses you, right? Real estate, you can buy anything. You can go to any listed stock market and buy anything. So gold, whatever, anything you can buy. But I think half of my job, even today, is I think pitching to founders on why he should take my capital, right? Some of the best founders are literally, flushed with so many capital options. I have to do a sales pitch. I put out a Notion document where I pitch myself on how I help founders as well. So yeah, so I think it's just overall a combination of exciting things. It's some part sales as well because you're selling money and time your own. So I think it's a combination of things. But angel investing has generally been pretty exciting.
Amazing. I think you touched upon a few very important points, and I think we'll go deeper into them. How do you kind of build your own brand? What value you can offer to founders beyond capital? Right? How do you kind of go slowly about it? Think very carefully. How do you kind of stay on top of the returns aspect of the asset class as well? right? But what's been your journey? Like how many companies have you invested in? You touched upon that, like on an average, the returns are about 22%. So if you don't mind sharing, for us, like what's been, like the picture for you, over the last 10 years since you've been investing now.
Yeah, so I've done 180 investments. So I started off firstly doing very tiny angel checks, like 5, 7 lakhs in 2014. So 2014, I think I invested in Sugar Cosmetics, test book. I put all of this information out on my LinkedIn as well, like even the returns as well. I put it out publicly. So 2014, I started, maybe was doing 1, 2 investments because the companies we start nahi ho rahi thi. I think people were still warming up to the idea of being a founder now because of Shark Tank and other things. People are excited to be a founder. But 2014 is when I started. And then I think I paused in 2016 when I was doing the AngelList India stuff. And then I mean, by that time, I think I had done 15 or 20, like in 4 years. And after that, the syndicate model really picked up. So that's when I started doing like 10, 20 a year. And angel investing kari, for syndicate, mein people started seeing good deals from me. So they kept on backing my syndicate. And then I started raising small micro funds because I think with syndicates, the problem is that you can't commit like, I mean, suppose I say 100K, I won't be able to be sure that the 100K will be raised by me, right? I might find the idea exciting, but will people otherwise find the idea exciting if there are no signals in the round, like something says Sequoia or a Matrix investing in the round? So then I decided to raise a small micro fund called iSeed, which was in 2020, just when COVID was hitting. So the first fund was a $4 million fund. The second one, which I raised, was a $21 million fund, the iSeed 2. That was in 2021. And then the last fund is sort of like this Galaxy iSeed hybrid, which was a $45 million fund. I'm the solo partner in that. Naval, Tim Ferriss, Elliot Gill, Lockie Groom, all of these people who've done great companies and now great investors were LPs in that fund, including some late stage funds as well from the US, like Inside Partners. So I've graduated from angel to syndicate to a solo GP fund. That's been the journey or the career trajectory that I've taken in terms of my investing. Yeah, 180 investments. I've got 3 unicorns, many other companies like Ultra Human, Park Plus, and exciting companies which are in that 500 million to billion range as well. But I think the key learning has been that it's, I mean, people say that, I mean, why will this idea not work? I say the downside is 1x, but the upside is literally 100x, right? I think my best return has come from a company which is, I mean, a pretty big company now. I think it's been, I mean, at least over 200x multiple on that investment.
Wow.
And my personal IRR is over 60% in terms of unrealized, and realized is close to 55.
Amazing, amazing. And over the last 10 years, like how has your investment thesis evolved? Like maybe as an angel, and then when you're running your own funds as well. Like has it been consistent? Like do you have a thesis that you look at early stage companies, only tech companies, consumer brands, or is it like across certain sectors? Or has it evolved? Is it changing regularly?
It's, I mean, so easy to start a company, but it's also the hardest time to build a company, a differentiated company, because I mean, D2C brands are, they go Instagram, pe every other ad is like literally just D2C brands like selling you the same supplement again and again in like different colors and branding, right? So, I mean, differentiation has become harder, right? And I mean, what I look for in an investment opportunity is literally just the founder. Many founders go into startup ecosystem for the wrong reasons. So you need to assess that founder market fit. I typically take between 2 to 3 calls, and I know in my gut that this is. So over that, like last 10 years of being in the ecosystem, gut is the best thesis that I have. Like honestly, it's refined. It's so much key. Now within the first 20 minutes, you know that I want to go deeper into this opportunity and spend more time, or say no. Right. And by that time, like now I'm at a point where I think I sometimes don't even take a call, because if I take a call, then the chances of me investing in that company are pretty high. So I don't want to waste a founder's time also. And like this thing, a lot of investors love wasting time. So I have at least come to a point that I can pretty much source and like sort of know if I want to be more interested in this opportunity in the first 20 minutes itself. But totally sector agnostic. I think India is not that deep and wide to have a very sectorial approach. Like, I mean, there are hardly few space companies, or like D2C, of course, is now a burgeoning ecosystem. But I think overall, I am pretty generalist. Like I've invested in Sugar Cosmetics. I've invested in a gin brand as well called Stranger and Sons. I've invested in even a restaurant chain, to be honest. So it's been pretty diversified along with all the tech investments that I've done. But tech is the, I mean, place where you can get an outlier return as well, right? I mean, software can grow pretty exponentially than say a physical product or a service.
Got it. Got it. Amazing. And how do you look at portfolio building? Right? Like you mentioned it over, like the first 2 3 years, you did about 14, 15 investments. And I mean, so do you invest, let's say, in 4 5 companies as an angel? Let's say, would you invest regularly every year in 4 5 companies, or would it be like some years, let's say 2020, 2021, could be more active as compared to other years? Like how does one kind of think about building a portfolio? And like if let's say they are sector agnostic, right? How do they kind of make sure that they're getting like investing in companies across different sectors, so that kind of you have a balanced portfolio?
So I think more than balanced portfolio, I think of course it's driven by macro environments as well. Like 2021, so many companies were starting up, the hype was up, really up in the ecosystem. So I think everyone was investing in more companies than compared to like other times as well. So I mean, for me, I think when I was an angel investor, like a single small check, this thing, tab to any nice company you can get your hands in, like I was investing, right? Even though the access was very limited back in the day. Luckily, I started writing content for Your Story and a couple of other places like LinkedIn and stuff pretty early on. Now everyone is a content creator as well. I mean, you must know at Instagram as well, like everyone's putting out reels and stuff to like stand out and like build inbound deal flow. But back in the day, I started early, so at least whatever I could like get my hands in, like I was like, let's invest. So that was very limited back in the day. And then uske baad in syndicate, I think it became that I was looking for more branded companies. Like, I mean, say, people where there are other strong signals in the round investing. So there were like top angels like Kunal Shah and all of these other people investing in those companies. So I said that, yeah, I think it's a good place to be. I think then it became more about branding and access to branded seed rounds. It helped me in some way. I mean, of course, get a good portfolio as well. And when there are good other people in the seed round, I think it just increases the odds of success for that company. So that really this thing. And now because I'm running a solo GP fund, so I need to do that fund maths in my model. I was not driven by ownership, this thing, but of course, invest earlier. Like, I mean, as an angel investor, your job is not to invest in a company which is valued at 50 million, 100 million, or even like 50 crores or 100 crores. I think your idea is to go younger and earlier, right? And then as a syndicate, of course, the rounds became slightly more expensive because I was looking for signals in that round and other people to go invest with, just so that the syndicate could get attraction and interest. And then as I became a micro fund manager, I think the thing became about ownership. Like, so a $5 million fund or a $4 million fund, you need to think about every investment has a place in the fund. Right. So I think the ownership target was, in my opinion, what I was going for, at least 0.5% of ownership with every investment that I was doing. And the fund had around 30, 35 investments. So companies like Even Healthcare, Ultra Human, E6X, many other exciting companies came out of that first fund. And then when I raised the $21 million fund, then that ownership target became 2%. If I get a portfolio of 30 to 40 companies in that fund, then I think I should have 2% ownership, because assume that if a company becomes a unicorn, you will be diluted down across different rounds to say, I mean, 0.8%, 0.7% by the time it's a unicorn valuation. So that should make sense from $1 billion outcome from a fund perspective. Of course, all of this is very early, but it all makes sense, at least on an Excel sheet. And now that ownership target has moved up. But as an angel, like, I mean, if I was doing this thing, then I would focus on getting into very early companies, like very young, very early companies. Try to invest with people who've got experience in the ecosystem, just so that you have some guiding light. Because, I mean, investing, I think committing to a deal is one thing, but there are so many other things to look for, like the legal rights, like all of those other things, right? I mean, there are, money is money, but I think there's like, I mean, bad money also and good money, right? I mean, some money comes with like strings attached and like different clauses and stuff, which I think only experienced people with that real world knowledge in investing can help you with.
Mm-hmm. Interesting. And how you've kind of shared this journey, like how it differs for an angel investor versus a solo GP, versus syndicate versus a fund, where as an angel investor you kind of look at strong signals, as a fund you kind of look at ownership, in a particular company. I think that's an interesting evolution. I think Nivesh had a question. Nivesh, do you want to go ahead?
Yeah, thanks, Karan. So, Utsav, I just wanted to understand. So, I'm a very, very early stage investor right now. Like, I've just started and I've, maybe probably just made 3 investments till now. So my initial thought is that I am a D2C and e-commerce specialist, right? So even there have been times when I've found a good SaaS deal or a fintech deal, but I'm just a little hesitant because I think that I don't understand the sector very well. So just because there's good pedigree from the founders, or the standard checklist is there, but is this a fine approach, or am I limiting myself by only focusing on things that I completely understand? What are your thoughts on that?
No, good question. I think, I mean, everyone has those doubts, but I think in the early days, just focus on the founder market fit. Like the founder has to be in it passionately, right? I mean, you don't have to run the company, so you don't have to be a specialist in SaaS, right? I think that's the founder's job. Your job is making sure that you remove obstacles in the founder's journey for him to become successful, and that can mean in different ways. Like I mean, this can be making introductions, like to future investors or potential hires or potential customers, and that in itself is a good value add from your perspective in helping the founder become successful. So I think not knowing about a sector has never stopped me from investing in a particular space. I think so. Don't limit yourself. I think that's a bad way to look at this. I think the only thing you should look for is the founder's passion and the founder market fit. If he's doing it for the right reason, has he experienced the personal problem? Is he spinning out an internal product from a company? So all of those things I think make more sense, and those are the things that you should check for, rather than like knowing about the sector yourself. The best rounds move so quickly that you will not even have like two calls sometimes. Like I mean, the best deals that I've done, sometimes I had to take a call on one call itself. So you won't have the time to even assess like those things.
Yeah, I think that makes a lot of sense. Thank you. Thanks so much.
All the best.
Utsav, how do you go about building your personal brand? So that like when you started and as you evolve, right? Like so that the best founders kind of reach out to you, you get access to the best deals, right? Because I'm guessing a lot of it is about deal flow, right? Like, if you're getting the best deals, generally, like you kind of invest in the best founders, right? So like, how do you kind of build your brand so that you get access to some of the best deal flows?
I think it's increasing surface area. I mean, different people do it in different ways. Some people are good in front of the camera. They can talk reels and put out like content every day. So I think now, I mean, the world has changed. Like I think everybody needs to have their own distribution as well, right? I mean, build unique niche content. Like I think there's so much recycling happening about the same thing again and again that it's very hard to find a niche. But if you do, like I think having your authoritative voice about a particular topic, I think will be very useful. I was luckily blogging and a little bit writing here and there in 2014. So I was writing about crypto in 2016. I on my Medium blog post, it's still there. And I mean, Naval gave me my first, crypto as well. So that's how I got into the space early over an AngelList offsite. But so that's when I discovered that there's no place to buy crypto in India. Like, I mean, it was Unicoin, which was charging so much and all of that stuff. And then started writing about the bad experience. And that's when like I got connected to Sumit, who's the founder of CoinDCX, on a Twitter exchange on a Sunday. So increasing the surface area. I was talking about my bad experience in crypto. So I think many people can do that, right? I think people are looking for that unique this thing. For me, after I think AngelList India, the network became so strong that I was doing less of outbound and more of inbound. So early days, I think go aggressively hunt for companies and founders. It can be at events. It can be like many different ways, right? I mean, communities like yours or like platforms like AngelList. I think the idea is to just have a good outbound network. Like do this more actively if you want to get good at it. And eventually now I think I have a portfolio size of 180 companies. So I think there are so many founders which is referring other founders to me. So I think for me, I'm not good with content or like putting out videos or any of that stuff. I'm pretty brief. अब offline के लिए थोड़ा करना पड़ता है. So I'm getting into that habit of writing again. But I think the idea is that, find your surface area, increase your surface area some way or the other. Like I think be present at panels, talks, or any of that show your authority on a particular topic. So for me, I think now the portfolio, the network is strong enough that it comes to me.
Interesting. I think one interesting takeaway for me here is that you kind of wrote about a problem statement or you wrote your thesis and then the founder kind of reached out to you, right? So essentially, so I think content creation can be across multiple formats. It can be video, it can be audio, it can be photo, it can be text, right? So it's not necessarily that you need to be good in front of the camera, or you need to push out a lot of reels. Like if you're doing intelligent content, even if it's written content over your blog post, over or LinkedIn, right, over Twitter, X, right, any platform that you're comfortable with, right? And if you're kind of expressing your thesis, or like areas that you want to invest into, I think good founder, you kind of increase the surface area, and you increase the possibility of good founders kind of reaching out to you internally.
Yeah, and in this world of AI, I think a lot of people, I mean, LinkedIn, where I log in and there's like everybody is just, I think, posting an article from ChatGPT. Honestly, don't do that. Like, it's not unique. It's not in your tone of voice. It's not anything that's going to help you stand out. Like, I mean, take help from all of these AI tools. There are good video tools. There are good editing tools, but use them as editing tools. But the original content or the thought come from you.
Yeah, yeah. No, I think in the world of information asymmetry, and when the cost of making content is going down so much, I think it's important to kind of have real value content, and content, that kind of matters, right? So I think if you can put attention there, you can, I think, really stand out.
Yeah.
I think Ashish, you have a question.
No, no, I was just impressed with the thought line that a lot of people are putting comments on LinkedIn, which are actually generated through some LLMs.
Got it. Got it. Great, great. I think, Viraj, you want to go ahead?
Yeah. Utsav, because we are speaking about you have a long, you started early since 2014, and a big portfolio since then, 10 years, and you've seen the ups and down cycles. Could you also talk a little bit about the failure rate in so that you are building the appetite for that, because angel investment there will be some failures.
Yeah, yeah. I mean, assume 100% failure. The minute you write check, assume 100% failure. That's the best way to look at it. I think, and time diversity is also important. Like, I mean, if you have a corpus of, say, like X amount of like 100 rupees, don't invest that 100 rupees in like just 2 years, right? I think play for 5 years. Assume that this corpus will also increase at your end, but I think play for at least 4 or 5 years before taking a call, because the best companies, I think, I mean, they go through all ups and downs. Like, I mean, CoinDCX had to pivot like a couple of times from India to Mauritius to this thing. Their products changed, all of these things. Indian regulations on crypto changed as well. But now it's, I mean, thriving as a global company. So all of these things, I think you just need to be careful. All takes a long time to play out, right? This is not the liquid stock market where you can invest something and just get money out. So I think have that time horizon to give yourself this thing. Right, and assume that it's a 0% return. So it shouldn't be like more than 5-10% of your overall portfolio if you're not doing this full time as a allocation in your this thing. So I think play with time diversity in mind. Failure rate is pretty high. Failure rate, I don't want to put a number to it like percentage wise, but it definitely is pretty high, especially at the angel stage. At VC level, of course, things can be different, but because they have access to later stage capital, institutionalized sources of capital. So I think this thing, but at angel level, the failure rate is very, very high. There will be, I would guess 80% of angel investors probably do not make money, or good money at least. Or they've not even, Indian stock markets, right? In the last 2 years, of course, it's this thing, but Indian stock markets have given 30-35% annualized return liquid, right? You're tying yourself up in an illiquid asset class. Are you willing to forego that other return, right? Opportunity cost of money also. So I think just combine all of these things into your personal portfolio allocation game. And why are you doing this? I think is very important. Those thinking process to this thing.
And just to add on that, would you recommend a balance between being an angel investor and being an LP with some funds, so having some early stage investments through angel investing, and then eventually in some funds becoming an LP and balancing that out?
I honestly think that's a good approach. If you have angel investors, typically, everybody wants to be an active angel investor, get the limelight and all of those things. But I think for most people, investing in reputed funds, I think there is so many funds that have started in the last 2 years that most of these fund managers don't have good access or judgment or even a proven track record. So I think be very, very careful on diligencing that opportunity as well in terms of fund investment. But I think funds would make sense for a good amount of people also.
So just to what you mentioned, like what would you say about selecting criteria for the funds? Because just you mentioned that you have to be a little bit diligent.
Yeah. Access and track record, I think, are the two most important things. Is the fund manager unique in terms of what will they bring uniquely to the table? Will they be able to source founders, convince founders? Is their reputation in the market good and pristine and ethical? I think those are the key things to look for when diligencing a fund manager. And have they done this for a while? You can't wake up one day and say that I'm going to start a fund. I think you need to have proven track record, proven investing track record, or at least some sort of angel investing experience to get into that fund management business as well. Because startups is a very hard game. I think getting access to the best founders, you're competing with the likes of Sequoia, Matrix, Lightspeed, all of these fund managers who have moved down the value chain. They're investing as little as 1 million into companies now. So how will a fund manager be able to win a deal against these guys? I think those are the things that you should think about when doing a fund investment.
Thank you.
Naman, you have a question. You can go ahead.
I would prefer. I just wanna insight कि many investor invest their money seeing the current trend or what's happening right now, like tech, then blockchain or then AI. So what's the right way? Because many of the investor are FOMO driven, कि they will miss out some good investment in the trend. So what's your insight on that, and what should be the right way of investing while choosing any company, or should we go out of trend and invest in those which can be potential in future?
Yeah, I think, humans are social monkeys, right? The car that you buy is dependent on where you live in a neighborhood also. So we are social animals. So I think FOMO-driven investing to chalegi, no matter what you say, right? I think you've got to pay to play also. But I think overall, the real alpha in anything lies being early. Imagine buying a plot of real estate, right? If you're buying in the high-end colony, then it's already inflated in terms of pricing. But if you're able to locate what the next trend is, say Khosla Ventures did OpenAI before it had ChatGPT out. I think that's where the real alpha lies. So I think if you're going against the trend, of course you can go wrong also. The failure rate in that case will be even higher, but I think that's where the real returns lie. Crypto was not big in 2016, 2017, at least not in India. So that's when, it was pretty big as a return for me. All of those things I think you have to definitely take into account. But I think a combination.
Joyce Central.
Joyce Central. Joyce Central.
Sorry, I'll just put more on mute.
Yeah. So I think it's a combination of few things. Of course, go with the trends, but I think always try. What Peter Thiel says, being contrarian is where all the returns lie. So yeah, I think that's one way to look at that.
And just to add on, what are some exciting opportunities, from an India POV that you see over the next 5 to 7 years?
Jeremy, crystal ball gazing nahi hoti mere se. I'm bad at that. But
Any trends?
I think India is just growing as a market. I think the consumption story is overall great. So I think you're going to see a lot of D2C plans come up, a lot of opportunities for consumers to try out these new products. So I think definitely there's something exciting there. But of course, it's not as a unique trend or a viewpoint. But I think, let's see. EV and all of these sunrise sectors, I think space tech is going to get a big boost with all of these launch vehicles getting cost is getting compressed. So I think there are many exciting things in tech as well.
Got it. And just in terms of consumer, right? What's been your investment thesis, right? Because there's so many consumer brands that you see, every day there's a new brand on Instagram, right? There's so many supplements brands, health and wellness brands. So how do you kind of, one, obviously you throw insight on is the founder market fit, how passionate the founder is, how obsessed they are about the product. But any other signals that you look at while evaluating consumer businesses?
Consumer businesses, I think, content to commerce game is pretty strong. I'm a fan of Brian Johnson, what he's doing. He's built this 3-year-long authority on health and fitness. Anything that Brian will sell, I will buy blindly. If he sells me, I don't know, shampoo, pen, anything, I will buy, because he's built that authority, right? So people now get attracted more to the person than rather the brand, right? The person in itself is the brand now. So I think India, I think we've seen I mean, many Deepika Padukone and all of these people tried to launch their brand, but I think they didn't have authority. Like, I mean, I would not buy Deepika's skin cream because like this thing. So I think
They had distribution, but maybe they didn't have authority.
exactly. So I think content to commerce game, I think will be pretty interesting in the future. I think in India, like I think who has the distribution, I think will be key. Distribution plus authority.
Interesting. Utsav, I think looking back at your journey over the last 10 years, what have been some mistakes that that you've made, right? Like which you can maybe now, which you now look back on and you feel that you could have done better, which like early investors can now kind of take care of as they're starting their journeys.
I think, I mean, earlier I had limited access to capital, so I think saying no more often. Like I think in this game, I think you should say yes more often. If you have access to good founders, like I think don't. I mean, I refused to invest in Meesho at 8 million valuation. I thought it was too expensive, and WhatsApp pe kaun kharidega kuch, in like when they were just graduating from Y Combinator.
Yeah.
So I was like, Han. So now instead of becoming more pessimistic or being more pessimistic, I've become more optimistic. Like I love saying yes and why this can work. I mean, the downside is 1x, but I mean, the upside was literally 500x, right? That in itself would have paid for every other mistake that I've done in the ecosystem. So I think, and sometimes like maybe in 2021, I invested too fast. I raised a larger fund going from a $3-4 million fund to like a $21 million fund. So I was like, oh, wow, let's invest more. So I think maybe just pacing myself out. Like Naman pointed out that it's easy to go with the trend, FOMO, all of that stuff. So I think maybe just sticking to your gun. Like I think sleep on a decision at least for one night if you have that option, and then see if you're still excited by it the next day.
Very interesting. I think on the Meesho thing, one interesting thing is that you still got, like, you had the founder pitch to you, right? So like you still had access to that deal flow. So I think that's a positive to kind of take out of from that story.
If you say so.
Varun, you want to go ahead?
Yes. Hi, Utsav.
Hi, Varun.
So, two questions. One is probably in your 10 years journey, and probably you've probably spoken on this already in different parts. What are your 3 top do's and don'ts in terms of investing for a new investor? That's kind of one. The other is generative AI is now the new game coming into various. It's kind of starting off into various industries, going into various industries. Do you think that is going to have an impact on the way your investing strategies would change? Second, does it also have a capability of impacting on the tacit knowledge you have? So I'm trying to say that the Gen AI can become an investor on your behalf, right? Is that it's too far off, but then still, I just came to my mind, so I thought I should ask you.
So at offline, we invited this Oxford-based mathematician who spoke about AI and creativity. I think creative businesses will still, I mean, they can be enabled by AI. Like AI can help you like refine like process or research and something, but it will not replace access and judgment. It definitely cannot. So I think AI will be enabler, but not, I think, this thing. And I mean, investing in Gen AI, was that a question?
No, I'm saying investing. You are a journalist, so I'm saying that you are investing in various companies. Does your viewpoint change, let's say, for a company because AI has come into play? Because there are some inefficiencies in companies which might go away because of implementation of Gen AI, which was probably the only primary point which was holding that company back from, valuation perspective. So is that something which needs to be looked at seriously, or it is just part of the normal game of assessing the business?
Technology enhancement. Like I think that's how I look at it. Like I mean, to be honest, it's the same productivity boost for everyone at the same time, right? So there are some companies, of course, which benefit, like in video or like video creation companies and all of that stuff. But I think it's just technology enhancement. Like I mean, it's not gonna like change my investing thinking around a particular company. But there are definitely some companies which have benefited from it. So I mean, good existing portfolio companies, maybe future ones. So I think overall, it's just a good technology enhancement in terms of improvement for everyone. And your other question was 3 do's and don'ts. I think we've covered most of it, but bullet point may, I think, I mean, pace yourself. try to answer this question for yourself on why will a founder come to you? Is it good content? Is it good judgment? Is it good network? Or is it like access to large amount of capital? So build your own unique USP, right? I think it has to be a USP that you have to answer for yourself as an angel investor and be very clear on what you're selling to the founder as well. And do just be helpful. Like I think most investors will be helpful by just handing a check and then not troubling the founder. There are angel investors who love regular updates and all of that stuff, and that's on founder. Like I think give him time to like execute, but I think it's good for the founder to come back to you on what. I mean, instead of pushing help, like always, I think I'd say that founders should pull help from me. They should tell me what I can help with, and here's what the things that I can be helpful with, and I don't try to waste time. Don't I think I mean, don't go too fast. I think don't go too big. I mean, pace yourself. It's a 4-5 year journey of at least knowing if you're good at it or not. Don't go too big. Like, I mean, don't get excited by one particular opportunity, because some of the best companies at seed round, I think, look exciting because somebody else is investing, but typically they turn out to be duds as well. So I think just pace yourself and time your, right size the check amount that you give to the company as well. I think those are the few things that I'll say are don'ts.
Okay, thank you.
Easy. Navya has a question. Navya, you want to go ahead?
Hey Utsav, hi.
Hi.
Utsav, so my question is that for somebody who's just starting with investing, would you recommend some funds which are okay with with letting us invest with a relatively smaller ticket amount? So let's say around 7 to 8 lakhs. So okay, can you recommend some funds for a beginner who's just getting onto this journey?
So that there are SEBI restrictions around that. So an angel fund can take 25 lakhs as the minimum commitment over 3 years or 5 years now, I think.
Yeah.
And a regular AIF has a 1 crore commitment. So a fund will not be a good fit for you. I think what you can do is maybe direct investing or investing in syndicates, where I think the minimums are as low as 1 lakh rupee.
Yeah, okay.
We've tied up with RTAF, so like we enable minimum of 50,000 investment as well. So, but yeah, obviously like, there has to be like a 25 lakh rupee investment over a period of 5 years.
5 years.
Got it. Thank you. Thanks.
Utsav, you want to go ahead?
Yeah. Hey, Utsav, just wanted to have conversation with Utsav, but it's been an insightful conversation so far. I just had a question that just add on to the extension of what Navya asked. So let's say I'm somebody out as an individual who doesn't have much access to capital, like as a regular corporate guy, 9 to 5, somebody as an individual, but I do want to get into angel investing, and let's say 5-7 years down the line, I want to have that's a good set of portfolio to work out with. And given the fact that you mentioned that there are some restrictions or criteria which are mentioned by SEBI or regulators to be a certified investor, uh, let's say if I want to just work with, let's say, some of these, VCs, or let's say some companies who are like in a company and they work with founders in investing capital, and I just want to be, let's say, part of them, let's say, work with them in terms of understanding, okay, how do they approach, how do they break down, and how do they work with these things, so that I can sort of learn from them, and then maybe going forward I can start at non venture. So from an initial standpoint, let's say if I may not qualify as an angel investor right now at the moment, how do I sort of start to understand how this entire process work, and let's say learn to analyze things and get insights from the processes?
I mean, everyone is putting out so much content that I think education is free. I think it's your willpower which is probably lacking. I think, log on to YouTube, log on to Instagram. I think everyone's teaching angel investing for free, basically. You don't need to work with a VC for that, to be honest. Like, and sessions like this can be helpful. I mean, Accelerate does a lot of that. So I think, knowledge is free, I think, to be honest. I think it's willpower which is probably lacking. So I think what you can do is, instead of learning from a VC, position this in a way that what can you teach the VC? I think build a thesis, like, your story, Inc. 42, all of these things are actively putting out, press releases about who's getting funded and stuff to see where the trends are headed, right? Build your own viewpoint around a particular space sector and where the world will look like in the next 5-7 years, right? What are you most excited about? And will you be curious to learn more about that? And then just use the online resources to like put out your own version of what the world will look like, right? and form your own viewpoint. And I mean, VCs are very, very strict in terms of where they hire. Typically, they hire IITs or IIMs and ex-founders. So I think it's, I mean, better for you to build your own individual worldview of where the world will look like in the next 5, 7 years, or sectors that you're most excited about. Start writing memos around that. I think writing is a great form of putting, um, I mean, thoughts on paper, and I think it will help you refine your own thinking process as well. So I think you have to get started with your own end. Content, knowledge, all of that is available on the internet. Like if you just look for it. So I think working with a VC, you will not learn much. I think the question that they'll ask if you want to work with them is, what can you teach them, or what can you uniquely do for them?
Got it, got it. And just as a final add-on, since you initially mentioned that you worked with Naval, so obviously working with him would have shaped your thoughts and perspective in terms of have a much more deeper and insightful view towards investing. So probably my approach was from that standpoint. I understand that now the criteria would have been much more tougher to work with a VC, but do you still suggest at this point that I refer content from like other sources rather than going with the VCs right now as well?
I think, I mean, Naval and I never discussed investing, to be honest. It was not even a conversation or a topic that's ever come up with him, because I was building AngelList in India. So I think the idea was that how can I navigate regulations, right? And that was my worldview on what AngelList can do uniquely in India and how it can do that. Like, I think that was more valuable to AngelList and Naval than like this thing. And we never discussed investing per se. Like, I mean, of course, that's come up as a conversation across coffee and dinners, but I think what I could offer to AngelList at that point of time, I think that match was made there.
Got it, got it. That's all. Thank you so much.
Also, I think just to add, like what has really worked for me is kind of, increasing the surface area in terms of curating the people that I hang out with, and building my personal network. Right, like I've been investing now for the last 4 years, and one thing that I've done every day is kind of meet 2 to 3 new people, either founders or investors, every day.
Yeah.
For the last 4 years, and I mean sometimes it's not about exchanging dollars. It's about what value can I add, and that's the kind of currency we have. Like people, I mean, if you can just offer value to folks, right? So I think building that community, building that network itself, kind of teaches you a lot about the industry, about the trends, about what's happening. So I think like that's also like a great starting point. That when I was in your board, Utsav, like a few years ago, what I looked at. And like if you reach out to folks with the right intent on LinkedIn via email, everybody replies, right? So I think just reach out, build your network, build your community, offer value. Like that's one great way to learn.
100%.
Awesome. So this was important. Thank you.
You want to go ahead?
Naman, I think is.
Yeah. So, sir, I want to ask one more question. So, in India, if you see many startups are like emerging in this wealth tech or investment tech platforms, like if you see many of the platforms are now like having a smaller ticket size investment in startups. So, how you see their future, and if we compare it with like Republic or V funders, do you see any future in India in near future?
Of investing platforms.
Yeah.
I mean, do your own diligence. Like I would say that I don't want to comment on specific businesses or models at this point of time. I think that is a much longer, different conversation. But I think do your own diligence on where you invest. Like I think be very careful with your money. You don't want to part with it too easily also.
Got it. Got it. And sir, one more thing. In India, I see that there is only a limit of 200 people on the cap table, but in the USA or in the Western countries, there is slightly higher limit. So do you see any change in regulation over there, or like will still have the same kind
Frankly,
of?
200 people is also a lot.
And 200 is a lot. Like, I mean, anything more than I would say 30 people or 40 people on a cap table is extremely a lot. Like, I mean, the compliances to get vet signatures in this country, I think will just make it, I mean, a painful process to deal with. So I think 200 is a lot, trust me. And by that
Got
time,
it.
it will already be public. So yeah.
Got it. Got it. Thank you, sir.
Apurva, you had a question. You want to go ahead? Param, you would also type the question you want to ask. Maybe I can just cover the questions on their behalf. So, Apurva wanted to ask on specific clauses that an investor should look at while investing.
Yeah.
And Param wants to know about hurdle rates for funds beyond which you get a carry. So, is there a generalized norm for that?
Yeah, I think, I mean, the legal aspect, like, I think the first thing that I look for is pro rata. Like, if I'm investing in a company and it becomes hot, then, I mean, typically you should get the right to defend your ownership in that company. It's most unlikely that I will exercise that right given my stage and earliness of the investing journey that I'm in, like, in terms of going into the company and my fund size. So typically, like, I want pro rata. I think pro rata or right of first refusal. Tag along and drag along is important. Like, I mean, a founder or other investors shouldn't be selling their shares and you are left hanging in the company as well. So those are definitely, I think, some of the good ones. Then I think information right is useful. I think because you want at least even if the founder doesn't send business updates, you want access to their financial statements, which you get if you're a shareholder. But I think more information can be like, I mean, different things, quarterly updates and stuff that you want from them. But I think that's a much longer session and somebody more capable than me can definitely answer that better. Hurdle rate, Param, I run a small fund. So in that case, I don't promise any hurdle rate, nor do I agree to anything. Like, I mean, if somebody is expecting like 8, 10, 12%, they shouldn't be investing in my fund anyway. So yeah, so hurdle rate, I don't promise, but some of the larger funds typically go for 8 to 10 to 12%. Like that's the standard range if you're investing like into a 100, 200, $300 million fund. So those LPs have different requirements, institutional LPs. Yeah, I think I've covered those questions. Viraj, I think you want to.
Yeah, I just wanted to add with what Navya asked. Because of the capital restriction, you suggested angel investing, but if the capital is not a issue, would you recommend some like 5-6 names of the funds, if in which is a good book in your, it gets good marks.
मेरे पीछे आओगे तो मैं recommendations नहीं दे सकता. None of this is investing advice. Do your own research. I think, I mean, you'll find enough sources, and if you speak to people, you'll be good to get more deeper insights into the fund life.
Sure. Thank you.
And I think one of the things, like when you're looking at starting your journey, is never kind of get driven or influenced by what somebody else is saying, right? Because my intention of investing in a fund or in a company might be completely different as compared to what your goals are, right?
Yeah.
So I think it's very important to kind of build your own thesis and build your own viewpoint while investing in a startup or investing in any fund. Utsav, like last couple of questions from my side, and then we can wrap up.
Yeah.
So one is planning exits, right? So like across your 180 investments, how over the last 10 years, how many exits you have seen? How can investors plan exits? Like, is there a certain way you can go about facilitating an exit? When a company becomes larger, or like is there a good timeline also on when an investor should exit, or should they like hold on to their investments for a longer period of time?
So angels typically get good exit opportunities because such a small ticket size is easier to clean up on the cap table. So founders typically, when they reach Series B or C, funds start making secondary liquidity offers, typically with a 10-20% discount attached to it for giving you early liquidity. But I think, I mean, the best things compound much later. Like, I mean, imagine exiting, like investing in Misho firstly, and then exiting at 500 million or a billion, right? So you would have exited early and then you would have sat with some regret. So some of the best things compound much later. It's a very J-curve style journey where things just shoot up much later into the life of a company. So exiting too early also can be this thing, but take some partnerships off the table. I think that's a good strategy where I have, like, I mean, say in sugar cosmetics, right? I mean, it's become a big company. So I took some of my capital and some multiple on top back. So just so that I can reuse that capital in other opportunities also, right? In investing in other startups. Apart from that, I think you can't plan for it. Like, I think in startups, I think it's all, I mean, it comes to you. Like, I mean, can't really, as a small angel investor, influence exit decisions. Apart from that, I think praying is the best strategy. Pray for exits every day.
Got it. Ashish, you want to go ahead?
Yeah. Hi, Utsav.
Hi,
I've been investing the last 3-4 years through AngelList only, and one of the first deals I did was Go Quick, when you had invested.
Nice.
And so I just wanted to understand, I think apart from the due diligence on the on the company, the market, and the founder. I think probably, doing that diligence on the syndicate and the syndicate lead is probably also much more important. And this is where I'm been struggling lately, that I haven't been, because I invest in smaller check sizes on 3 to 5 lakhs only.
Yeah.
So having that conviction on the syndicate to probably, do their own diligence, as well as, support in getting an exit. Probably, I think 5 years down the line, everyone is looking at, okay, what's the opportunity wherein the syndicate lead can facilitate you an exit, because you won't be able to do that on your own. So how do you probably would go about finding, or finding a good syndicate lead? So that is somewhere I'm struggling with for the last year or so.
So Ashish, we should talk.
Sorry?
I was saying, Ashish, we should talk.
No, I mean, see, of course, there are, people who've been doing this for a while. Like many people started syndicates and they've not been doing this for a while. So they probably rely on their immediate circle to get their syndicate up and running, get more capital from their immediate network. But I think only invest in syndicate leads who've been doing this for a while. And most people put out their track record or other information about their journey on, are they exciting founders, are they exciting operators, or are they exciting investors? So I think just observe the journey and like maybe just subscribe to the syndicate and see the opportunities come up for a while before even committing to that syndicate in particular, right? So I think that's one way to do this. And then, of course, knowing the syndicate lead, maybe requesting them for a call, I think is a good way for you to see if you want to chat with them. And if it's a new syndicate, most likely they will oblige in an introductory call with you as well.
Got it. Great, great. Utsav, last question. Any book that you're reading right now that you recommend, for the community, like from a knowledge perspective, like something which is like, it can also be off angel investing, something like, which has like influenced you in your journey over the last 10 years?
Noel Ramikant's Almanac, I think everyone should read this in life. I think that I'm reading right now this book called The Messy Middle by Scott Belsky. That's a good one. Then Clear Thinking by Shane Parrish is a nice one that I'm reading right now. Then Elon Musk's biography by Walter Isaacson was a good read as well. So these are some of the books that I've read in the last 2-3 months.
Interesting.
Yeah.
One book that I have recently picked up, which was recommended by actually Chris Cox, who's the CPO at Meta.
Yeah.
The book called Understanding Media by Marshall McLuhan. So he's a Canadian philosopher in the 1960s who looked at historical trends on how media was evolving. Like we started millions of years ago through speech, and then went to cave paintings and scriptures, and he looked at that and started building chapters. Like chapter 1 was speech, chapter 2 was cave paintings, chapter 10 was photography, and then he started writing down chapters. Chapter 36 was newspapers and print. And in 1960s, he predicted chapter 41 as social media, chapter 42 as mobile messaging, chapter 43 as AR and VR, and chapter 44 as AI. To kind of communicate media. And the book talks about how bad as individuals we are on understanding the future of media, and how fast the time loop is evolving in terms of how communication and language in media is evolving. So I think that's something that I've picked on. It's a heavy read, but it's very insightful. So I think people are looking at dabbling into AI, AR, VR, and future technologies. I think that's a good framework to kind of refer to.
Nice. No, what's the name of the book? I think somebody asked that question. If you can repeat.
It's called Understanding Media by Marshall McLuhan.
Nice.
That's it. Vignesh has a question. Are you open to kind of sharing your email? How can one contact you in the future?
Just stopped it.
Great. All right. Thank you so much, Utsav. Thank you so much for your session. Really enjoyed your time. We're on time as well. Thank you for the insights. Love how you always give back to the community. And
organizing this, and really appreciate the time.
Thank you. Thank you so much, everyone, for joining in.
Bye-bye. Have a nice Sunday.
Bye.
Thank you all.